Welcome to our channel. If you want to minimize taxes on investment gains and keep more of your profits, follow these step-by-step instructions to optimize capital gains strategies. Step 1. Understand the difference between short-term capital gains taxed as ordinary income and long-term capital gains taxed at preferential rates of 0, 15, or 20%. Step 2. Hold investments for at least 1 year and 1 day to qualify for lower long-term capital gains rates rather than higher short-term rates. Step 3. Time the sale of investments strategically. If you're near the 1-year mark, waiting a few days to reach long-term status can save substantial taxes. Step 4. Harvest tax losses by selling losing investments to offset capital gains, then reinvest in similar but not identical securities after 30 days to avoid wash sale rules. Step 5. Consider your income level when taking gains. If your taxable income is low, you might qualify for the 0% long-term capital gains rate. Step 6. Donate appreciated securities held over 1 year to charity instead of cash. You can deduct the full fair market value and avoid paying capital gains tax. Step 7. Use opportunity zone investments to defer and potentially reduce capital gains taxes by investing proceeds in qualified opportunity funds. Step 8. Implement tax loss harvesting systematically throughout the year, not just at year-end. Work with a financial advisor or CPA to develop a comprehensive capital gains strategy aligned with your investment goals. Don't forget to like this video and subscribe to our channel.